Hello everyone, and welcome to our next technical analysis review for the Euro US dollar pair. Today is August 15, 2012, and we are currently looking at price action on the 10-minute chart. And I have this yellow vertical line drawn in dividing yesterday's trading session from today's trading session. And as you can see, since the opening of the Asian trading session, and actually during most of the Asian session, price had been moving within a tight range. And this is just another indication of just the summer volumes, the light volumes that we typically have during the August month. So for most of the Asian session, there was very little movement until we got near the European trading session, or near the opening of the European trading session, where volume picked up a bit, and we began to see range-bound movement in the pair of about 30 pips. And although it was at these levels up here around our 2340 level up here, we can see that price still had a hard time breaking and closing above these levels. So then this proved that this 2340 area was a good zone of resistance. It made a few attempts to actually break above this level and close above it, but it could not. So then this was resistance for the day. But it wasn't until a few hours later that, of course, we saw market sentiment shifted, and we began to see the Euro US dollar pair sell off due to just diminishing convictions over whether QE3 would be announced by the Fed in September. The recent data coming out of the US on yesterday kind of made the likelihood of QE3 just less likely to happen. So then, of course, we saw this sell-off in the pair where we saw dollar strength come in. But not only that, there was also news that Greece was asking the EU for a 2-year extension to its current austerity program. So this news just caused euro weakness altogether, and we began to see the euro fall in this bearish move in the pair for most of the trading session. And actually for the day, we saw the euro fall 80 pips from the session high here at 23.44 down to the session low here at 22.64, where it found support for the day, and it fell about 80 pips for the day. And right now you can see that price is currently within a consolidation pattern below the 22.90 handle, awaiting the breakout during the next trading session. So if I were looking for an opportunity to enter a trade during this bearish move lower, or this bearish move in a pair, then I would have done so when price had broken this 23.17 support level right here. You can see that on a few occasions on today and one on yesterday, that this 23.17 zone served as support for our pair. So what I would have done, I would have set up a sell limit order a few pips below this support at around 23.14. I would have set my stop loss at around 23.26. And then I would have took my profit, held on to this trade, and took my profit when price had reached the 2300 psychological level for about 14 pips. But if I were a bit more aggressive and I wanted to take advantage of the pickup in bearish momentum that was in the market at the moment, then I would have held on to this trade and took my profit until it reached the support at 22.71 for about 43 pips. I would have closed it out below the August 9th low at 22.67. I would have closed it a few pips above that at 22.71 for about 43 pips. So you can see that this was one trade entry with two possible outcomes, depending on what type of trader you were at the time. But as you can see, the pair had fallen, and after this fall, you can see that during this time, the euro began to exhibit very choppy price behavior during the early part of the U.S. trading session. You could have actually played this range. You could have played the upper level of the upper area of this resistance here at 22.90, and you could have actually traded between this resistance and this support down here at 22.70 for a few extra pips. But it probably would have been more beneficial and better just to stay out altogether, since there was just a lot of erratic price behavior and just uncertainty at that time due to just some of the U.S. economic numbers that had come out prior to this price action. So then so then of course we could see that it was pretty choppy during this time. But for the most part, we can see right here that price is currently within a consolidation pattern ahead of the Asian Open. And if it breaks through this 2295 resistance and eventually breaks above our 2300 psychological level, then we can expect price to test this 2317 resistance up here. And if price breaks and closes above this 2317 resistance, then we can expect stops to be triggered and further momentum to the upside towards the session high at 2340. And this is what we can expect if price breaks, to the upside. Now, if price breaks to the downside, what we can expect our next support to be around the 2265 area or 67 area right here. And if price breaks and closes below this level, then we can expect additional selling into our next support level at 2240, which would be our August 10th low. So then, of course, we can expect either or during the next trading session. We just have to wait for the breakout. But that's it for my technical analysis review for today, and I will be talking to you guys later. You guys have a wonderful day. Okay, bye.